Welcome to today's presentation on the SSBCI Capital Program Quarterly Report. The goal of the presentation is to walk participating jurisdictions through how to complete and submit quarterly reports. The presentation will be broken into three parts. First part will be an introduction to the SSBCI quarterly reporting and submission requirements. Second part will be a demonstration of the quarterly report template and how to complete the template. The last part will be a demonstration on how to download and submit the quarterly report in the SSBCI reporting portal. With that, we will begin with what is quarterly reporting on the next slide. The SSBCI Capital Program Reporting Guidance sets out reporting requirements for jurisdictions that receive SSBCI funds. More specifically, Section 4 of the guidance details out reporting requirements for quarterly reporting. For quarterly reporting, jurisdictions must provide basic program information and program level information on the use of SSBCI funds. To facilitate the jurisdiction's reporting requirements, Treasury has created a customized quarterly reporting template and spreadsheet format for each jurisdiction to submit in the SSBCI reporting portal. Each customized template includes pre-populated data such as program name, program administrator, total potential allocation, and cumulative amount of SSBCI funds that have been dispersed to the jurisdiction. If any of the pre-populated data is incorrect or incomplete, please reach out to Treasury before submitting your quarterly report. The data on the quarterly report template that the jurisdiction needs to complete include SSBCI funds EOT, that is expended, obligated, or transfer funds for loans and investment for each approved program. SSBCI funds EOT for administrative costs, program income earned, cap charge-offs against the federal contribution to the cap reserve funds, and lastly, SSBCI funds budgeted for each contracted entity for the life of the program. We encourage jurisdictions to review the capital program guidelines on EOT requirements, as well as the capital program guidance on specific data to report. Moving on to the next slide on when are quarterly reports due to Treasury. Quarterly reports must be submitted to Treasury for the first full calendar quarter following the execution of a jurisdiction's allocation agreement and each quarter thereafter. The deadline to submit the quarterly report is 30 days after the end of the quarterly reporting period. If the 30th of the month falls on a weekend or federal holiday, the due date will be the next business day. For example, for the reporting period of April 1 to June 30th, 2023, the quarterly report due date is July 30th, 2023. Since July 30th, 2023 falls on a Sunday, the due date is Monday, July 31st of 2023. Generally, each submission window will begin on the first day of the month with the submission deadline. For example, for the reporting period of October 1 to December 31st, 2023, the submission window begins on January 1st, 2024, as the submission deadline in this example is January 30th, 2024. Moving on to the next slide on who needs to submit a quarterly report. Each jurisdiction must submit to Treasury a quarterly report for the first full calendar quarter following the execution of the jurisdiction's allocation agreement with Treasury and each quarter thereafter. As an example, a jurisdiction that signs the allocation agreement in the second quarter, which is the reporting period from April 1 to June 30th, the jurisdiction's first quarterly reporting requirement starts in third quarter. And for jurisdictions that sign the allocation agreement in the third quarter, which is reporting period from July 1 to September 30th, the jurisdiction's first quarterly reporting requirement will start in the fourth quarter, and so forth. As previously mentioned, Treasury has created customized quarterly report template for each jurisdictions that are required to submit a quarterly report. The templates are generally available for download before the submission window begins. Email notification will be sent to jurisdictions that are required to submit quarterly reports at the start of the submission window, and additional reminders will go out to the submission prior to the submission deadline. The next slide will be on reporting prior quarter activity. There may be circumstances where a jurisdiction has EOT, that is, expended, obligated, or transferred funds from the quarter prior to the required reporting period. For example, if a jurisdiction executed the allocation agreement on May 8th and during the second quarter, the jurisdiction has expended funds in the amount of $100 for a loan participation program. And in the third quarter, which is the first full calendar quarter following the execution of the allocation agreement, the jurisdiction has expended additional funds in the amount of $200 for the loan participation program. For third quarter reporting, which is the first required reporting period for this jurisdiction, the jurisdiction should input $300 in the current quarter input field. Another example would be if a jurisdiction has program income from the quarter prior to the required reporting period, the jurisdiction should report the prior quarter income along with the current quarter income in the current quarter field of the quarterly report. Moving on to the next slide, we will cover adjustments to quarterly report. Adjustments or corrections made to an amount reported on a prior quarterly report can be on a subsequent quarterly report template. Jurisdictions that need to make adjustments to data reported in a prior quarter should enter the adjustment in the adjustment field of the quarterly report and provide the reason for the adjustment in the additional information section of the quarterly report. There are 3 acceptable reasons for an adjustment. They are 1, removing an obligated loan or investment that is no longer expected to close, correcting a clerical error such as transposition of a number, or when directed by SSBCI. Please note that adjustments are not applicable for a jurisdiction that is reporting for the first time. If a jurisdiction has a large adjustment or swings from one quarter to another, we recommend letting us know before submitting your quarterly report. Moving on to the next slide on reporting administrative costs. Administrative costs should be reported separately from program funds EOT. Program funds EOT should only include loans, investments, and funds to be used for 171 amounts for services for portfolio companies. All other expenses are considered administrative and should be reported in the administrative cost field. For example, if a jurisdiction makes a commitment of SSBCI funds to a venture capital fund and a portion of those funds are administrative funds to be used for the VC fund, the jurisdiction should report the administrative portion in the fund's EOT for administrative costs section of the quarterly report. Moving on to the next slide on reporting program income. Program income is defined as gross income received by the jurisdiction that is directly generated by an SSBCI supported activity or earned as a result of SSBCI funds during the program period. Interest earned on SSBCI funds not invested or lent to small businesses count as program income and should be reported in the quarterly report. Jurisdiction should only report its pro rata share of the program income that is attributable to SSBCI. For example, in a loan program that is comprised of 60% non-SSBCI sources and 40% SSBCI funds, the jurisdiction should only report 40% of the gross income as program income on the quarterly report. Moving on to the next slide on unenrollment. A participating jurisdiction may wish to unenroll a particular transaction or use of administrative expenses from its SSBCI program account if the jurisdiction or treasury identifies a potentially non-compliant use of funds or the OIG identifies an instance of non-compliance or misuse not characterized as reckless or intentional. If a jurisdiction identifies a potential non-compliant use of funds, the jurisdiction should notify Treasury prior to taking any unenrollment and replenishment action, even if the transaction has not been reported to Treasury. Treasury's written approval is needed to unenroll a closed transaction. Continue on enrollment in the next slide. Jurisdictions that have potential non-compliant transactions at the time of the quarterly report deadline should use the modified certification on the use of funds and provide brief explanation of the potential non-compliant issue. Treasury has provided a sample template in the reporting portal that may be used to provide the relevant information on the non-compliant transaction. Jurisdictions should reach out to your outreach manager to discuss any potential non-compliant transactions. Please note that Treasury's approval on unenrollment and replenishment does not preclude the OIG from conducting its own review. Moving on to the final slide on accessing the quarterly report. A user will have different levels of access based on their assigned role in the portal. The most restrictive role is the account administrator. This user can only view and download the template. The account point of contact or POC role is able to view and download the template, but this user can also upload a completed report. Lastly, the authorized representative role can view, download the template, upload a completed report, and is the only user who can certify and submit a report. As an example, an account POC can upload a completed report, but an authorized representative will still need to certify and submit the report for it to be submitted to Treasury. If the user does not have an authorized representative role, an error message will appear, preventing the user from submitting the report. For clarification, for reporting purposes, the authorized representative for reporting is a role in the SSBCI reporting portal. In contrast, a participating jurisdiction's authorized representative in the allocation agreement is an official with authority to sign the allocation agreement on behalf of the jurisdiction. This concludes the introduction to SSBCI quarterly reporting and submission requirements. Thank you.